Welcome to the Daily Update. This is being prepared Thursday, February 24th, where we'll talk about what happened in the markets, and then we'll look to see how things shape up for Friday, February 25th. And on a personal note, those of you watching these videos, not very many of you know that I am currently living in Eastern Europe. And even though I'm from Seattle and I'm a native Washingtonian, about 4 years ago, I moved to Belarus, which is kind of right in the middle of everything that's happening right now. I didn't think that that was really worth mentioning because the internet makes things irrelevant and we can share information regardless of where you're physically located. Well, with everything that's going on right now, that has become more relevant to me personally. And right now, just to let you know, I am safe. I haven't seen anything other than I saw one military airplane fly over 3 or 4 days ago. I'm in the city of Minsk, but Minsk is teaming up with Russia. And the US Embassy has suggested that I leave, but I have a family here who cannot leave. So I'm gonna try to stay for as long as I can. One little trick that they've done here in Belarus before is that they will cut off internet connectivity to stop any flow of information. If you're watching much of the news and everything these days, what you're seeing is the same thing I'm seeing. If I look out my window, it's in fact, it's snowing right now, but it's peaceful, calm. Nobody's going crazy. I don't see any tanks rolling by or anything like that. But if you've studied World War I and World War II, they leveled this part of the world before. So if things get really bad, I may have to hightail it out of here and get to at least a NATO country and possibly work my way back to the US. And I'm not planning on doing that unless I really see the need. But sometimes they cut the internet here, and that may preclude me from uploading videos. It may also preclude me from getting information. Sometimes with the sanctions that are being placed on these parts of the world, my debit card often doesn't work, so I may not be able to buy food. So it's kind of a mess right now, but usually I don't share these personal type things. I just felt that those of you that do watch these videos should know about this. Everything is fine. Personally, I'm safe. My family is safe, but it might change and I may have to stop doing these videos for a period of time. I don't intend to do that, but I may not have a choice. So that being said, let's get on to what's happening in the market. We had a pretty solid up day, but I'm calling this just a relief rally. The futures were down really, really strong overnight, and we had a big gap lower. Well, there was such a gap there, and we had fallen so far so fast, and we were right at support that we saw a lot of buying coming right back into the market. So to go back over what happened at the open, the futures had been down over 2%. At one point, I think I looked and they were down 2.5%. They are down right now as I started to record this. And the dollar had a really good day on Thursday, and gold was all over the place. So it was a pretty crazy day. But as the day went on, we just saw buying, buying, and buying, and then we gapped lower. And one thing that can be seen as potentially positive is that the open was the low. We were down 2.6%, right at the open. But then whether it was people doing short covering or new people trying to buy bargains, especially in the tech sector, those stocks that have really been beaten down, we just saw a pretty positive day that eventually went positive. Prices grinded back. I was really watching that unchanged level, but we were able to break through that and actually go into positive territory. And we ended up closing at the high. And so we were up 1.5% for the session. and volume was quite heavy. It was well above average. It really spiked up. Of course, that really hasn't changed anything as far as the charts that we're looking at. That's why I'm calling this a relief rally. The technicals are still negative. We still have some earnings reports that are coming out. We still have inflation and interest rates to deal with. But the main news right now is what's happening between Russia and Ukraine, with Belarus being stuck kind of in the middle of all that. And then Germany decided not to go through with the pipeline, which has stuck Belarus a little more in the middle. And now Poland is a little more in the middle of things too. So this is a fast moving situation and a lot of conflicting things going on. So I like to think that I have good sources of information, but they can only report what they think is true. Okay, so getting back to the markets, that was a relief rally, and I think you'll see this better when I start looking at the charts. And prices are back down, we could say back up to the bottom of the short-term range. We're right about at where we were before. Russia, Ukraine are dominating the news. Canada's kind of taken a little bit of a back seat, at least in the current headlines. And one thing that was interesting, as I was watching the overnight futures that were down heavily, I was watching the Russian markets as they were open, and they were down over 30%. So their own stock market doesn't really like what's going on. They have two indexes, and I think one closed down 33% and the other one closed down 38%. So that's a lot of value. But Russia, they're not a big player when it comes to the stock market. They may have a lot of influence geopolitically, but what's happening in the Russian market doesn't carry over into the other markets. So we can just kind of watch from the sidelines on that. We did have some economic reports that came out. They were mixed. Some came in stronger than expected. GDP came in at what was expected. Unemployment claims, they actually declined a little bit. So some reports were a little stronger, some were a little weaker, some were right in line. We continue to be overvalued. And yes, if I'm able to, I want to record a video that talks about the valuation of the market and go into more detail. When I just glance over this in these videos, I want to go more in depth, but that's more longer term. We are still seeing a strengthening trend. The update that we had, yeah, the ADX trailed off a little bit, but we're still in a downtrend with the bias remaining negative as well as the momentum. So let's look at what happened. Because we had the bit of an update, fear eased off just a little bit. It had been down around 23. Let's see, week ago, they don't previous, 27. Oh, my mistake. We've actually gotten a little more fearful as things have happened. And then here's the longer term look. When we really take this chart more seriously is when we drop down below 20, or if we get above 80. Then we also had and I went over this, no, I didn't go over this. On Thursday, we had the AAII survey come out. And if you look way over to the right, the top is the S&P. You still have the majority of individual investors, they are still negative. I have the raw line, the raw data here, and then I have a 4-period moving average on top of this as well. And so individuals are still extreme negative on the market right now, which could point to some kind of a bounce. If you look back other times when they were negative, this marked some kind of a bottom. Will it happen this time? No. The situation that we're in right now may last for a period of time. Then the VIX actually declined a little bit on a closing basis because we had an up day. And this is also potentially positive. The VIX started out at the very high for the day and then closed at the very low as prices advanced. Trying to see the glass half full in some ways. Then the VIX of the VIX, kind of the same thing. Started out at the high and then dropped. Also on a closing basis, the VIX dropped. Then we're also looking at this Ulcer Index. As prices fall, this is another fear gauge that we look at. It is continuing to advance. And then here's a longer term view of that same chart, just to give you some historical perspective. There's not necessarily any magic in where we're at right now. It could go higher, it could turn and go lower from here. As far as the sectors that have really been getting hit hard: tech, communications, discretionary, real estate, industrials. That's more of a value play there. They really benefited from the relief rally that we saw on Thursday. There were still 4 sectors that were down: materials, energy, financials, staples, those areas that have been doing better. So we saw growth really have a good day, where value backed off slightly. Here's our sectors. Energy is still performing the best since the all-time high. Even with the good day, discretionary is still not doing very well. Communications are still struggling. Real estate and tech, they're going to need to bounce up a lot more from where they're at right now to get more positive. As far as inflation, BDI actually declined a little bit on Thursday. Then as far as Fed Watch, again, just because I have new people watching these videos all the time. That's another reason I haven't really promoted these videos, because I don't know of my personal situation right now. And I don't want to go out there and say, yeah, I'm putting videos up every day, and I've got this Facebook group that you can come talk to. Well, with everything kind of in flux right now, that's why I've trailed off a little bit with that. But this, before the CPI came out, my gosh, 2 weeks ago now, we were at almost a 95% chance of a 1/2 to 3/4 raise in interest rates at the next Fed meeting. Then it switched over to more 50-50, and now this is where we're at today. So they're still pricing in almost an 81% chance that the Fed will raise interest rates 1/4 to 1/2 at their next meeting in March. And the way things are moving these days, that's like an eternity from now. So anything could happen. Then, giving you some historical perspective, we see the 1/4 to 1/2 going up in probability as the 1/2 to 3/4 declines, and the 0 to 2.5, that's pretty much off the charts now. It's irrelevant. Technical alerts, that we had so many, I really had to make this smaller. And there used to be a way, yes, I can make this a little bigger on this page, where we start at the bottom here, and we had the S&P below 42, NASDAQ just in the toilet, and these were negative, 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 and then we crossed positive, and then things started to generate some positive technical alerts. NASDAQ got back above 13.1, 13.2, 13.3, 13.4. Oil, man, it was up over 100 there for a while. Gold was also, it just skyrocketed up, but then spent the rest of the day falling back. The dollar has been hanging in there, though, even though it's a fiat currency and it's not backed by anything. Bitcoin's been having a lot of trouble, and the dollar has been holding up lately. So we had a lot of alerts triggered. Looking at the chart from Wednesday to Thursday, we had this huge gap down. We gapped down to S2 right at the open, and then that was the low. We pretty much danced up from there. At first, it was like, okay, let's fill the gap, fill the gap, fill the gap. We danced sideways, but then as the day went on, we went back up to the unchanged level, and on an increase in volume, we were able to break above that. And then we continued higher, and we ended up closing at the highs for the session. So taken in as a singular day, this was very positive. Taken in context, not much has really changed. This is the daily bar here, where we fell way down and even declined a little bit from here, but then we were able to push ourselves back up to really where we were, yes, the day before. and nothing has really been decided as of yet. So it's kind of like being on a treadmill right now. But you can see at the bottom, volume really spiked big time. Then we are still in correction territory. We're down, even with the advance on Thursday, we're still down 10 and 0.59%. So we drop below 10, we come out of correction territory. Growth really saw a real advance on Thursday with value seeing a decline. Also, the ratio between the two indexes show that growth advanced up here, but again, a lot of damage has been done before this. So we're going to have to see some real follow through if this whole picture is going to change. Then the NASDAQ 100 had a good day. It actually outperformed the S&P 500. As far as our trend, we are continuing to show a strengthening trend. So even though we bounced up, we're back to where we were before, and the trend continues to be negative with the red line on top. The mass index, we're still waiting for that signal. It doesn't necessarily mean that it's going to happen right away, but there is now a signal on the books, so to speak, that suggests that something is going to happen. We'll either break down or we'll be able to bounce back up out of this. The Arun, which is again more of a newer indicator that I'm introducing, we're watching where nothing really changed here. We were pegged, the selling, the red line, it's pegged near the top. Buying went sideways, even with the massive up day, and overall, the oscillator is declining. So this is still showing a negative picture with sellers in control still. Nothing changed on the decision point scoreboard. Breadth, we saw a bit of an advance based on price and volume. We're right at the moving average based on price. A little bit of a bounce based on volume, but a lot of negative action and a real negative divergence between price up here and volume, which is trailing off. And that has to do with the big tech companies really leading the S&P higher earlier. You didn't see broad-based participation in the market. Our advanced decline ratio, we had gone down to a negative, extreme negative reading. With the advance on Thursday, this bounced slightly. New highs and new lows. With that gap lower, a whole lot of new lows were generated, and that got picked up by this chart. So we continued to decline. So we're still showing a lot of internal weakness within the S&P. The accumulation distribution, because of the update, the volume got counted as a green bar, which is positive. So now we've danced a little bit above this moving average. Short-term indicators, we're far away from the 20. We're coming up out of an extreme reading on the 20-period moving average. We went sideways on the 50. We had a little blip up on the 200. Still negative overall. With our other moving average spaghetti chart, these things are twisting all over the place and nothing really was decided. We need to first go back and try to recapture the 200-day moving average if we're going to go up. These lines are going to continue to fall if we go down from here. The MACD, even though it turned ever so slightly, continues to be negative. The STO, which now seems to be picking up what is really happening, continues to decline, even though we had the up day. McClellan oscillator coming off an extreme negative reading and continues to be negative. We have to get all the way back to 0 for this to be switched back to positive. Our more touchy indicators, the Stoke Rsi is bouncing up from an oversold reading, and the Williams %R is also bounced up from an oversold reading. The force index, even with the advance, didn't really show much of an improvement. We're still red overall, even though we did come back up slightly. Then intermediate term, we're well below the 100-period moving averages. The PMO down across the board. So no real technical improvements. Our other PMO study, we're bouncing up after giving an extreme negative reading based on those PMOs that are rising. Any new buy signals just went a little bit sideways to down. Those PMOs that are positive continues to decline to be slightly flat. BPI, see way down here, yeah. With that gap lower, a whole lot of point and figure sell signals were generated. So this still shows a lot of technical damage right now. Now we could continue to bounce up from here, or we might just be setting a bit of a pit stop or a plateau before we get ready to move lower. The rainbow, we're not even up to the bottom part of the pot of gold right now. Stochastic short term, we're giving an oversold extreme reading that bounced up. Intermediate term turned up slightly, but is still showing an extreme negative reading, where the longer term stochastics are pointing down. Summation index, down based on price, down based on volume, with volume picking up some speed. All of our oscillators continue to be negative across the board. We're losing the Pring bottom fissure. This is in danger of crossing back over without necessarily anything happening. If you still want to generate some kind of a signal out of this, if we go down, that might be the signal that it was trying to give us. Vortex saw a little bit of improvement based on the selling pressure and a little bit of a bounce based on the buying power. The CCI continues to be in extreme negative territory. The rate of change 5 period, it's giving us an extreme negative reading and bounced slightly. The 10 period went sideways. And the 50 period bounced up slightly after giving an extreme negative reading. Our standard deviation, we're getting kind of far away as prices move quickly. They slowed down just a little bit on Thursday. And this, I haven't shown this chart in a little while, the Sean trend meter. We had gone down into negative territory before and tried to bounce up out of that. Well, we went down into negative territory and saw a little bit of a tick up on Thursday. As far as our trading systems, the Elder system, which is more short term and more sensitive to current price movement, it's back to a neutral bar, and the MACD bounced slightly. But the SAR, it's going to take a lot more for this one. This is more of an intermediate term system. It is still negative overall. Our different charts, the Heiken Ashi showed a little bit of an improvement. The Kegi is still showing more negative signs because we're just going back to where we were before, even with the relief rally. The Renko chart continues to be negative because we haven't climbed enough for that to change. And we're adding more boxes in here because of the gap lower open. 3-line break also continues to be negative. Equi-volume, we had a green candle because it was an up day, but tell me if that looks positive to you overall. It could be. We could jet up out of this, but we're still seeing a real negative environment overall. Point and figure, because of the gap lower, we added 2 new zeros. So we have now broken support according to the point and figure chart. Our retracements, we were able to get back above the 61.8 and right back up to about the 50% retracement from the all-time high, going back to the significant low set earlier in 2021. Long-term charts were below the moving average still. We're trying to climb back up to it, but longer term, the red line has not rolled over yet. Did I say logarithmic? I meant arithmetic. This is the logarithmic scale, is also showing some longer term weakness. Special K, also a longer term indicator, is continuing to decline. And here's a longer term view of that indicator. Some of the broad market things, see how we shot lower in the S&P and then went back up? You could potentially, I'm not calling this a reversal myself. Now, I may be proven wrong in this, and some of you may disagree with that, but there's just too many other negative things going on right now that I'm seeing in the charts to call this a bottom. Mid caps, they went down and actually broke through support, but then recovered nicely. Small caps also went down to support and recovered nicely as well. It could get more positive from here, but it could also get much more negative. The FANG stocks had a really strong up day, up almost 3.5%, but they have a lot of damage that has been done to them overall. We need to get back above the moving averages and have these lines cross back positive. That doesn't look like it's going to happen anytime soon. ARK, it had just been getting hammered. It was up 7.79%. So Kathy was probably a little happy after Thursday. The Dow got back up to previous support and actually closed slightly positive on Thursday, but we have a lot of room to go if things are going to turn back better. Isn't that a, no, it's build back better. Okay, then with the small caps, again, we're pretty much right back in the range we've been in. Mid caps, back in the range that we have been in. NASDAQ, back in the range that we have been in. And looking a little bit more negative. NASDAQ 100, back in the range that we have been in. Boy, do I sound like a broken record. The Vixen opened at, okay, this is reverse of the other chart. The NASDAQ opened at the low, closed at the high. As we saw more buying coming in, the Vixen declined, didn't close at the low, but did show a real decrease in fear. NYSE, back to the bottom range of where we've been at. The S&P 100, you'd like to see this puppy go up a little stronger on the bounce, but we just didn't see that. It turned up slightly, but not as much as you might think. The Wilshire, yeah, it's looking a little more positive. It's back up to within the range that we've been in, but it closed closer to the previous close from what we're seeing here. China, it looks like things are rolling over, and pretty much across the board, we're seeing weakness worldwide right now as we deal with the situations. Here's our all stocks. They didn't really show much of a recovery. They didn't bounce all that much on Thursday. Other broad market indicators, yeah, the dollar, boy, pew, which is really good if you're living in another country and getting paid in US dollars, like somebody I'm listening to right now, me. Yeah, man, you could take a little bit of money and live in one of these countries like a king. Here's the weekly chart as well, as we bounce up off of that moving average. Here's oil. Man, see how it shot up over 100? Well, it came way down after that and closed in about the high 92s, which is still very high, but that's lower than 100. And then gold, this was really amazed me. We just really spiked higher, but as the day went on, it went lower, 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 and it's kind of right back within the range of where it's been lately. Still positive overall as far as the bars are concerned. On a closing basis, we were down 0.65%, but this is still showing a potential breakout. But if we don't climb above this, this might be a fake out. Then silver, kind of the same thing, opened at the high, then spent the rest of the day going down. CRB didn't change all that much, just up 0.25%. I'm almost tempted to switch this chart over to the inflation chart because the BDI just isn't really helping us. Bitcoin, it got down into the 34s. The last time I looked, we were back up into the 36s. So it's showing a little bit of a recovery. Where we're really going to take notices of this is if we drop below 30 into the 29s. That's when you could see some real carnage with Bitcoin. As far as bonds, we're still declining as far as our spread between the 2 and the 10-year yield. Our 3 months to 10-year, that's not telling us anything, but I still look at it every day. As far as the interest rate retracement, we were able to get back above 50. Now we are seeing this as potential support. We're still just above this 50% retracement. But we did see a decline in the 30, 10, 5, 2, and even in the 3 months. So overall, with that big upward movement in stocks, we saw interest rates go down as bond prices went up, but no trends have really changed. Internationally, just to give you a look, Europe just got hammered too on over and over. That's what brought a lot of the futures down, was just this massive decline in Europe. So we'll have to see if they can recoup things at all on Friday. Here's the trend. This is a world index of bond prices. Looking at the corporate bonds, they did decline as their interest rates went up slightly. We're at 3.36 overall for corporate bond yields. And this is just giving you a longer term historical perspective, showing you that even though they are advancing, we still are at historic lows. Relative studies, the one I'm looking at on a daily basis is gold. If I can, I will do a daily video for Friday and a weekly video covering the whole week. And I'll show more of the relative studies that I like to go through. But with the decline in gold, it came back down, but still could be producing a breakout when you compare this to the S&P 500. So what do we look for on Friday? We're still in correction territory. And the last time I checked, the futures were down about 0.5%. That can massively change from the time I record this until the open. The markets do remain in that short-term range that we're in. The S&P is still at the bottom part of that range. We still have some earnings reports that are coming out. We're still battling between growth and value. Then economic reports, which might have some influence. Personal income and spending. We have PCE prices coming out. The big one that I watch is durable goods. And then we have some real estate things coming out, pending home sales. And then this other one, and I'll update the chart. We had the preliminary chart last week. Now we'll have the final chart for the University of Michigan Index of Consumer Sentiment. And if people are just not very happy about things and interest rates are rising, that they tend to go in the same direction. But right now we're seeing them going in opposite directions. We still have the political events. I've talked enough about that. Not really hearing anything out of the Iran meetings. And then Canada, things are still happening there, but there's other headlines that are taking over right now. So we are still negative and range bound as far as the S&P is concerned. We're still kind of testing that previous low to see if we're going to break below and then close below that. The short and intermediate term bias is negative. The long-term bias is still hanging in there, but showing signs of weakness, with the long-term uptrend potentially fading. So thank you very much for enduring. I don't usually share a lot of personal things, but because this affects people that are using these videos, I wanted to mention that. So I hope you have a very good Friday and a good, safe weekend, and I will put out the videos as I am able to do so.